Good morning, ladies and gentlemen. Today is 4/22, 2020, and welcome to another Wednesday edition of Investing Systems Trading Service Live Show. I'm Bill, and we're going to take a look at the market, and we'll take a look at a trade that potentially is triggering today. We'll take a look at some of the open trades and make it a quick show today. Not a whole lot going on. The market itself is in a pretty interesting spot. So, we've had this rally. I'm tempted to draw an uptrend line. Whoops. Let's see. I want to start this uptrend line from the very, very low of the sell-off. From the all-time high to the intraday low, I believe was about 37%. So that was quite the sell-off there. Interestingly enough, if I draw it right under the very next lowest low, look at how it sort of coincides with yesterday. So this was the rally, and then we had yesterday, which was kind of a nasty day. We had a gap down and then a big sell off, and I'm sure you guys know that there's been a lot of turmoil in the energy oil markets, right? Oil's been doing crazy stuff. So this is just kind of interesting that yesterday, could have been potentially a shot across the bow of this current rally. Potentially, right? Kind of, oh, I knew I shouldn't have moved that trend line. There, well, it lines up pretty good. So, yeah, trend line's a trend line. But the more interesting thing is where yesterday found support. You can see this particular day right here. What was that? A week ago, Monday, where the low found support in this little red zone I have drawn, which kind of goes back here too. These few on the way down, these few days here seem to have found support in that area. And the reason that that red zone is there, let me zoom out on this chart a little bit here and you'll see. And like I said a minute ago, the most interesting thing about yesterday was, there you go. Back in March, the low, I basically drew this zone at some point, probably when the market was falling, but at some point I drew this zone as like sort of a support level that goes back to last March, and then right there at the let's see, that was June 3rd, like the very beginning of June. You had two little sort of dips that sold off, and they basically the sell-off terminated right there, and they found support, and so here we are, and that's, I'm sorry, that was, that's June of 2019, right, and March of 2019. So that was like, this was happening a year ago, sort of. And so here we are today, and I've extended that all the way out, and you can see that it's still kind of a viable area of support. Call it 2720, 2725. When you're talking that far, a few points here doesn't really matter that much. But so there you go. That seems to be sort of a support level. We found support there, more recently and way back there. So that's an important level. It's kind of kind of an over-under type of thing, right? And so that's what we look for, levels in the market. I had a fib drawn on this chart, and we didn't quite make it to the 61.8. And the funny thing is that most of the Fibonacci aficionados out there, well, here, I'll put it on real quick, just for the fun of it. Most of the Fibonacci aficionados out there were sort of expecting that the market was going to rally up to the 61.8, because it just kept going, right? And last week, and it was extremely resilient, and 50% retracement was was a pretty good spot there. We had a lot of days that were like is it basically closed right around the 50% mark. And then we got, what day was that? Oh, that last Friday. We got that extra little rally last Friday. And so that made it seem like the market was, was being even more resilient than expected. And so this was a good target for everybody. Theoretically, there's still a lot of participants out there that are looking to short this rebound, right? Because um, my gut feeling says that the repercussions from shutting down the economy all this time and what's going on aren't necessarily completely aren't over, put it that way. You don't shut the economy down like we've done, and this and that. And so earnings season's gearing up here. And the funny thing is that January, February, and March, the first quarter, I don't think a lot of these companies really started to feel the effects of the shutdown until probably April, right? Maybe late March, April. I honestly I can't even remember when they started, shutting everything down. But I just get the feeling, and here's the cool thing about our system is, and I'm just rambling here because it doesn't matter what I think. The system's all based on numbers, right? So um, the recovery watch list, right, which we put in, back here in late March after the sell-off, has done pretty well because a lot of the entries and targets in that Jeffrey calculated got hit on a lot of those stocks. So we can take a look at a couple of those. But anyway, my gut feeling, look at this. We're hovering right around the old 50% mark again today. So right now I'm going to say the over and under, and that's easy to remember, is 2800. 2800 is basically the over and under right now, and that is right around the 50%. Some people draw their fibs like on a candlestick chart and just use the body of the candles. So everything is just you never have like exact numbers when it comes to the market because the market tends to overshoot, on the upside and the downside, and overshoot a little bit of what would be. So you got to round off a little bit, and I like to use round numbers that I can remember real easily. So I can remember that 2800 is right around halfway back up to the highs. Amazingly enough, the like the Nasdaq 100. Obviously, I left the fib on here. Nasdaq 100, first one to rally. It's typically the strongest, and they're crazy things because everybody, it seems like, is piling into the same. It used to be, I think it was like back in the 70s or something, there was the Nifty 50, and the whole market was being held up by the same 50 stocks, and that's where that came from. And now there's like maybe five or eight, maybe 10, but everyone's like, and I mean, you can rattle them off: Microsoft and Apple, Google, Facebook, these type of stocks. Netflix came out and is doing pretty good, and so the Fang stocks and the mega cap tech stocks, Amazon obviously, which is at a new high. So those are the stocks everybody's hanging out in, and that's where probably all the institutional money goes first. And so on this rebound, those stocks, if you took like the five or six largest market cap Nasdaq stocks, they account for a significant portion, like a third of this whole index. So what you're seeing here is really, five or six mega cap stocks. And all right, let's try this again. Wow, that was weird. That was extremely weird. Okay, here I am back. It's like my internet connection cut off. That was strange. Hopefully the show itself. Let me try and check that. Yeah, hopefully the show itself comes back on okay. That was extremely odd. The funny thing is that I just had an update to the software that I use to broadcast, and I saw a couple people commenting that it was disconnecting, but that was just strange. That was a little interruption in the show there. Hopefully I didn't lose anybody. All right, so there's the Dow. Dow managed to rally about halfway back up. Starting to look a little rough here. All right, today in the Dow, I guess this is IBM. I think IBM came out with earnings last night, and so it's affecting the Dow. And so, just looking at the different indexes, everything's a little bit different. On the Russell 2000, there's no point in even putting a fib on here because if you zoom way, way back, the high in the Russell was, in the late summer of 2019, right? And then it had that huge sell off into the end of the year, recovered quite a bit, never made another new high, and then this. And so I drew this little box that basically, this box basically contains the price action of the Russell since the sell-off and the rebound, and you can see that rebound is the weakest of all of them. And so, basically what that's telling you is looking around all these different indexes is that everybody's favoring a handful of large cap tech stocks, and that's typically not the healthiest sign for the internals of the market, right? I mean, this is 2,000 stocks here, and pretty weak rebound, but of course, small. It's just like it's just like with the economy. I mean, small business is suffering, and large monopolies are doing okay and making it through here. So anyway, so the most important thing, moving on after looking at the market. Well, let's go back real quick. S&P 500. Oh wow, today's not even on here. Huh. All right. Well, that means that I should probably refresh this and see if I can get everything going again. I think I had a little interruption in my internet. There we go. Okay, we're back in business here. So there you go. It's gonna be interesting to see what happens from here. So far today, we got like a little gap up, and we're just kind of hanging in a kind of a tight range here. So the ranges have been settling down. That's one last thing I wanted to look at before I move on is the ATR, right? So right at the maximum, right around the maximum point of the sell-off. Look at that ATR. It got up to like almost 200 points. And so these days back here, the S&P was moving like, 5% a day on average, and so that's been coming down, and that typically happens. The ranges come down as the market rallies, and vice versa. When you get these big sell-offs, the market gets, and people call it volatility, and obviously the VIX and all that. But what's important to me is the average range of the market, because the ranges have everything to do with everything, and so it's just kind of important to me because looking at the ranges kind of gives you an idea what to expect. And of course, we incorporate that into the system as far as like the targets and the stops and all that stuff. Everything's based on the range of the individual stock that we're looking at. So ranges are important. ATRs are important. Typical ATR, like the default ATR, is an ATR 14. We expand that out, and for the stocks that are in the swing trading service, we use a monthly ATR. Jeffrey calculates his monthly ATR in a little bit different of a way than you would think, but anyway, that's neither here nor there. So let's look at this. On the pending list, actually triggered today, is imagine this, dog, this is the one time inverse. This is one time, just a regular old straight up one time inverse the Dow, right? Meaning that if the Dow sells off here, this is going to go up. So this is actually a short the Dow, obviously ETF. So, but here's the thing to look at. All right, so this trigger price is 54.75. Last night it closed above the trigger price closed above the trigger price, and I hadn't marked that on here yet, but now's a good time to do it. So 54.75 is the trigger. Let's figure out exactly where that is, because I want to point out something really super important right here today. This doesn't happen a whole lot, but today's a perfect example. So let me just mark that on there, 54.75. So the way that the system works, as you guys know, is that stock shows up on, well, the stocks on the pending list, we're looking to close above the trigger price, and then there you go, close above the trigger price. It shows up on the triggered today list like last night when we did the update. And so the idea that to officially trigger a buy, the high of the next day's trading session must be above the trigger price, right? So what we're looking for is we're looking to, and so this is not officially triggered yet. That's what I'm getting at here. Long story short, this will trigger only if it trades up through 54.75, right? So the system automatically places it when we do the update. Like when we did the update last night, the system automatically placed it on the open trades, but it will come off the open trades list or data table if it doesn't trigger today. And then it may go right back into the pending with the same trigger. You know, that remains to be seen, but basically what this is telling you is, you know, what the system, I think, is trying to say here is that there's a decent chance that the market's headed down and this shorting ETF is headed up. So there you go. So anyway, as of today, so as soon as, you know, if for some reason the market sold off today and this went up, you could basically get in it, and you could get in this thing at, say, you know, 54.76 or whatever. So 54.75, and then you would be short the Dow. So and of course it's just a one-time short ETF, which is kind of nice because these leveraged ETFs, as you've seen with oil, can be a disaster. All right, so here's the other kind of cool thing is that the system, even though it's not officially triggered in yet, it's on the triggered today list. The system has already calculated the stop at what the initial stop will be if it officially triggers today. The initial stop will be at right here at 51.50. Let me mark that. So initial stop 51.50. Whoop, I messed that up. Okay, there we go. And the funny thing is, I had to actually drag my chart up, right? Because you can see it's just a hair below those prior lows. So, you know, this may or may not actually officially trigger today, and this could theoretically, you know, be trigger within the next few days, right? And you know, maybe if the market rallies, then this is going to head back down here, and so it won't be officially triggered. So it's going to take you know, a further sell-off in the market. But this is a pretty good setup here, right? And the other cool thing is that you know, the risk on this is not extraordinary considering what we're doing here is shorting the market. So that's another reason that we use we've got the one-time leveraged ETF in here. The average range on this, the system is showing a 4.1% average range, and so that's calculated over, like I said, that's calculated over a monthly time frame. So we got the ultra short the Russell here, and then we've got AMD on the pending list, and so there's not much happening on the pending list right now, but that's a function of the market having rallied up so much. So I think AMD, I don't know what all this is, to be honest. I can't remember. This might have been a previous trade or something, or a previous. Oh, I know what this is. Huh. This is, oh, that's interesting. For a minute there, my mind went blank. This is the actual markup from the recovery watch list, right? We looked at AMD, I think last week or the week before, for the recovery watch list. So that's what these marks are. So as you can see here, um, this was the day it triggered in on the recovery list, and then you can see this was the stop on the recovery list, and then AMD managed, geez, it rallied all the way back towards the previous highs there, and so it's hit both the targets, and so you can go in and watch the videos that Jeffrey and I did, a couple weeks ago that explains how to use that recovery watch list, and there you go. So that was a pretty good one. Anyway, so AMD, besides being on the recovery list, is also on the pending list today because of systems detecting this sell-off. And so basically the sell-off needs to kind of spend a little bit more time actually selling off, and then because right now the entry's like way up here over the highs, so that's kind of interesting. And then of course TWM, which is which is inverse ultra short the Russell. And so TWM basically, let's see, trigger. If for some reason, and the market seems to be kind of trying to hold up here, right? I mean, we just had a few days of a sell-off, right? And so this is inverse. It's been going up. So the market's trying to rebound a little bit here after, I think 3 days in a row of a sell-off. And I'll just mark where the trigger is on here, because these inverse ETFs can move fast, right? It seems like the market's kind of it wasn't a huge massive sell off that we've had, um, like extreme distribution like we saw during the big sell off, but now it kind of feels like the market ran up, which it did, and recouped like a significant portion, a little over half of the sell off, and now it's like the rally's running out of steam, and so the market's kind of in a little suspended animation point right now, and it's like Wile E. Coyote when he runs off the cliff and kind of hangs there in midair for a little bit. So, all right, so let's see here. All it would take is some bad news to hit or something, and then you get this swift sell off, and this thing could easily trigger in because well, I mean, look at the move that it made over here when the market sold off. It went from $12 to 30 in a very short amount of time. And look at the ranges on this thing. And so right now it just appears to be sort of in like this holding pattern. And of course, the TWM is short the Russell, which is in like this sort of holding pattern here. It didn't have much of a rally like the other indexes at all off of the lows, and so that's kind of interesting. Anyway, so let's take a look at through the open trades real quick and just kind of get an eyeball on that. So over here, let's see, open trades. Like I said before, the dog is when a stock hits the triggered today list, it just automatically puts it on the open list, assuming that, and this is true, like, 80, 90% of the time, it actually does trigger the following day. So the system just puts it on the open trades. If for some reason we get a rally today and it doesn't trigger, then it would just come off the open list tonight. So we can take a look through these other ones. You can see that, so far the current open trades seem to be doing pretty well. So let's just dive right in here. We'll start off with the newest ones. I don't even know what this Everbridge does, but I'm assuming it's like a big tech company because I mean, and look at the ranges on this thing too. But pretty good looking chart, really. You had this craziness and this big rally, and then it kind of sold down a little bit, and you see that basically sell-off right here created the conditions for a breakout and a resumption of the rally. And so there you go. The great thing about this is, and the trigger, of course, was like over here, right? By the way, that trailing stop, the trailing stop is just back over here, so it's around break even right now. The trigger was actually trigger level was 108.50, and so this particular day it closed a little bit higher. You know what I didn't mark on here was the target, and so target target is 125. So sometimes I sometimes I get caught up with what I'm doing, and so I don't actually mark the target on here. But so there it is, target 125, and of course, you'd want to. Yeah, I always talk about compensating. Like obviously, this day when it triggered in, it closed above the trigger, and I talk about compensating the target for it. So it's pretty close, and quite frankly, still looking pretty good, right? This is still actually looking really good. So however you want to play, however you wanted to, or perhaps did play this, so it was a little sloppy prior to the sell off here, but it seems to be on the rebound, looking really good. So let's move on to VIPs, which we've talked about here too. And yeah, I drew that line, and then you can see how it broke out here. And then funny thing is after it triggered in like right at the trigger price, which is always nice. So, see, the thing about a volatile market like we're in is that you get a lot of gaps up and down. I mean, the entire market and individual stocks have a tendency at this point in time to gap significantly at the open almost on a daily basis. And you take a volatile stock like this, you'd never know if it's going to open anywhere near the previous day. But anyway, so when it was on the trigger today list, it's the same thing as dog, right? The following morning, it actually opened below. It opened below the trigger price, and so it never triggered in that day until it came up through the trigger price 1550. And so that's perfect, because that way you don't have to feel bad about entering above the actual trigger price only to watch it sell off a couple days later. But this is supposed to be kind of easy on your nerves, slow going, and you can see that even though the next couple of days it sold off pretty hard, the overall rally, the change in trend actually happened, right? So a couple of days later, you had a little sort of a sell-off back to like a retracement, and so now you can see that clearly there was a trend change right there. Let me extend that one down. So there you go. Like, right here, it was the change in trend, and you can see it ran. This thing ran back up past the highs, blew through the target, right? So, yeah, I'm gonna say in this sort of environment that depending on what you're doing, yeah, it's not a if you just took it at the target or somewhere around the target, then that wouldn't be a big deal, because at any point in time, they can pull the rug on this rally at any point in time, and all it would take is like one really bad piece of news to hit the wire, and and then the market could resume its sell-off. So keep that in mind. But yeah, this is an open trade, and look where the stop is now. I mean, the stop just keeps going up, going up. So if this particular stock continues to rally, then the idea is that one of the strategies is you sell half at the target and you stick with the other half along with the trailing stop for as long as it runs. And so it is what it is. And let's look at the next one. DOCU, the old DocuSign. It's been another really popular name, I should say, because this company allows you to like sign legal documents remotely. So, what a great business. There's your target. It just barely poked at the target. Barely poked the target. So, but hey, the target's a target. 105 right there. And then of course that was probably like it opened, went up real quick and then reversed, and so now now it's trying to consolidate this big run up here. So theoretically, I mean, I can just tell by looking at these price bars. These are some big wide ranges, and so basically what happened here is the stock was having a decent sell off, and the system picked up on that. And instead of like sort of a longer duration sell off and some tightening ranges, it basically kind of it had this rally, sold off for 3 days, and then the rally, the uptrend resumed, and so that's why it kind of looks like it triggered in about halfway, which is fine. I mean, that's totally viable. Is you get a sell off and then you get a stock that has a nice rally and you jump on board halfway. Now, it would have been nice. See, here's what I was about to say is like you see these three bars right here, like these three kind of narrow range bars. If they had happened like if this big up bar didn't happen and these three narrow range bars were like down here 79 $80, then the trigger would have been a little bit lower. The trigger might have been in the mid 80s instead of up here, but it's just the nature of the market. Obviously we have no control over it, so and the system itself just basically is wanting to jump on board once the rally resumes, and that's just the way it played out on this one. So I'm just throwing that in there just so you kind of get an idea of why it looks like it triggered in sort of halfway up. So anyhow, moving on. This is the really nice one here, and yeah, this is kind of the same way. This had this big sell off and it started going up, but it was this little dip, I guess, this little dip right here that where the system picked up on like a little bit of a pullback, and so there you go, jumped on board. And if you think about what the overall market's done and you look at this chart, boy, this is a beauty here. I mean, this is really nice. There's a target up there today. Even it's floating up around the target. I usually mark this in a darker green just to make it stand out. And so you can see how the trailing stop is kind of coming up there. This probably move that over. And so there you go, beautiful uptrend. It's kind of it tends to pull away from this uptrend line, and so everything looking good here as of the close last night. Then and by the way, this one triggered in like right at the trigger price too. The closed this day over the trigger, open the next day like right there, and then off to the races. And so as of yesterday's close, this thing was up 18%. It doesn't look like a whole lot on the chart, but these are some pretty big ranges, and so that's 18% as of yesterday's close up here. Yesterday was kind of a weird day too. I mean, it was one of those days where you had this all these green days in a row, big run up, and then it tried to pull back, and obviously there's a pretty big demand for this stock because you get a bar like this, or if I looked at a candle, you'd see that what this means is that they tried the sellers stepped in and tried to sell it off, and there was enough demand for this stock. There was enough buyers that stepped in when it went down a little bit to drive it all the way back up by the end of the day. So this is a pretty hot stock here apparently. 5.9. So that one's looking good. Can't complain. And then last but not least is Gilead, which boy, this thing has just been it's been one of the weirdest stocks ever. Right? And I mean, everybody, Gilead's like sort of at the forefront of what's going on now, and there's been a lot of talk about it, but it's just really bizarre. You know, the pattern on this thing is really bizarre. The trigger after this sell off, so the trigger was way back over here, and you can see like the craziness that happened over here when it triggered in, and so it's kind of, it is what it is, but that trailing stop has been sort of following the uptrend line here, which I should probably go ahead and extend now, and so it is what it is. Yeah, still a decent stock. You can see that this stop, the system, since so much of this time has gone by, and since there's been two forays, up here to near this. The funny thing is that this particular day, or actually, yeah, like this day where this gap up is, this thing was trading at $89 after hours, right? And then by the open the next day, it opened at what 85.36. So that was kind of strange. There was some news that came out you may have seen, but anyway, that was just really weird. And I just I had it sitting here in my Thinkorswim, and which I leave on after the close, and I saw this thing trading 88, $89 after hours on, well, it was after hours on this particular day on 416. So anyway, it is what it is, and so, but the stop now is basically trying to protect it at break even. So we'll see what happens from here. It never quite hit the target during regular hours, which even makes it more of sort of an anomaly. This is like almost like an anomaly type of stock. Never It never actually, this right here, the high was 85.97, right? So it's just kind of ironic. And like I said, it traded above the trigger outside normal hours, but we'll see what happens with this. The way that this particular stock seems to act, it's really, this is a good place for the stock or stop, because you got this little sort of sell down, this little narrow range day today, and so either it's going to resume its uptrend, or if it's headed all the way back down, then just selling it at break even is probably the best way to go. So there was one trade that closed. One trade that closed yesterday that I wanted to look at real quick, and then I'll be done here. It's just JD, and I didn't actually, let's see, where was the stop? 43. $43 was the stop. Had moved up to 43, and I didn't. It was kind of weird because triggered in, had basically it triggered in, had like a 2 day rally, and then that was it. It hit a new high and then kind of reversed, and so it got stopped out. Fortunately, the stop moved up really quickly, so it was kind of weird because it was extremely strong right after it triggered in. I mean, it was making a move, but um, trailing stop that took it out was at 43, which was really close to just a little bit below what the trigger price would have been, and so it was basically a wash. But the funny thing is that at one point, like you can see this where it says max price is like it was up 11% up at these highs. Like that was like 11% move. So I wanted to see, the target was actually at 48. So let's see, did it hit the target here? 47.98, came within 2 pennies of the target. Unbelievable, huh? So you can just see how sometimes you get like these really sort of strange anomalies. But I'll tell you this. The cool thing about this is the fact that the trailing stop was able to, and I wish I had marked there was probably one or two interim moves of the initial stop in between where it ended up and got tagged. Actually, it got tagged this day. So there you go. I'm sure it moved up a little bit, but that's the idea of the system is kind of, and so it's like a let your winners run, cut your losers short type of system, and that's how it was designed. And so the other idea is that the trailing stop is designed to ratchet up as quickly as possible to basically get to break even. So there you go. So let's look at the SPY here today. S&P trying to rally a little bit from the gap up. Um, and so to me anyway, and I pull up the SPY because I don't have a bunch of stuff marked on it, but to me, there's sort of, so now we got, a couple of reference points here going forward. We have the highs from Friday, and we have the low from yesterday. And so that's going to be that's a pretty big deal. And so right now we're just kind of floating in there, and the market's going to try and decide which way it goes based on, and even if I extend that over here, it's you can see that basically, I'll pull that down just a little bit. There we go. So you can see that, the S&P is kind of, it's rallied up, and now it's kind of chopping around in a big sideways range here, and we're basically going to see which way that it decides to break from here. So as we approach if it decides to rally up to the upper end here, everybody's going to get all crazy bullish, and you might have some FOMO, fear of missing out, and that's how it gets to that 61.8%, right? Conversely, if for some reason, and I mean it's acting well today, but if for some reason over the next couple of days, or next week, it breaks down through the bottom of this range, then everybody's going to start getting scared again and think, oh boy, here comes the retest of the lows, and then they'll step in and sell. And so it seems to me that whichever direction this kind of breaks out of this range here is the side that everybody will take. Now, I'm not even going to talk about oil because it's so insane. I'm looking at CNBC, and they're saying that June oil's up 27% today to 14 bucks or whatever. And so, I mean, oil has just been crazy, and so strength in oil. I believe. I'm kind of surprised that the market itself didn't really tank this week when oil went below zero, or actually the June oil was like at 11 bucks. I think yesterday it lost lost half its value. So anyway, that was kind of strange, and the market held up, I think, relatively well. Now yesterday was a big down day. I mean, it was Dow down 600 points or whatever. I think the S&P was down 3% or whatever, but it wasn't like one of these days. It wasn't really a huge rout like we saw on the way down over here, and that was kind of surprising because clearly there's some big problems out there. So anyway, so here's your little reference point here. So far so good on these open trades, everything looking pretty good. Gilead in jeopardy of maybe hitting that stop. I don't know, but the rest of these looking pretty good. And then of course, keep your eye on dog to see if it actually triggers in today, or if not, as I said, it will come off this list. It may still be in the pending, and then we'll see what happens if the market sells off from here. If the market breaks down through the bottom of this, then that will likely trigger in. Of course, it's based on the Dow, but and so that's that. So anyways, hey, thanks for tuning in. I appreciate it, and I will be back. Oh, you know what? Jeez, sorry about that. I had that little problem before with the internet cutting off, and I didn't even realize that I was cutting off part of the charts. So no big deal. So hey, I'll see you guys back here next